I would like, if I may, to take you on a strange journey.
Hello, everyone, and welcome to another edition of Real Estate Realities with the Rebel Broker. My name's Robert Whitelaw, and I am the Rebel Broker. Licensed real estate broker in the state of California, member of the National Association of Realtors. But please, don't hold that against me. Welcome to it, folks. We're halfway through the week. Today is Wednesday, August 10th, 2016. I hope all of you are doing well. Yesterday was a very special episode of Real Estate Realities where we got in touch with our feelings. I hope everyone enjoyed that. Sometimes I feel like I overshare. Apologies if you agree. Yeah, but I don't know. You know, what's funny is that's one of the most frequent non-geeky or stat related or statistic or just it's totally a thing. I mean, I can tell you how to evaluate a property to find out whether or not it makes sense numbers wise. But what's really funny is how frequently, or maybe it's not funny. Maybe it's not something we should think of as funny. That the number one thing that I think holds people back is not that stuff. It is that the emotional side stuff, right? So I think learning how to kind of deal with that, or at least be introspective enough to push through it, is great. And boy, do I envy those people who have none of that baggage at all. Just none of it. And I have encountered a few that just I don't know if they are hiding a huge ball of fear somewhere deep down inside, and they're just managing to keep that little sucker suppressed and tranquilized and tied to the wall or whatever. But what's funny is how unusual that is. The person who is free of that is the really rare one. So it's and I love, boy, if I could come up with a Tony Robbins-esque how-to thing, boy, I could sell 1 million of them. But the truth is, I think the real answer is different for everybody. So unfortunately, it's hard to do that other than giving really general suggestions about how to explore your own stuff and what's going on with you. But anyway, promise not to drag us down into that again today. We're going to talk about different stuff today. Kind of interesting subject relating to rents, how that affects everybody, whether you're a renter or whether you're an investor. And we'll talk about areas where the highest amount of relief is needed for folks who are doing the renting and what those areas might be experiencing in the near future. So we'll talk a little bit about that. But as always, I like to start the show off by letting everyone know how to get in contact with me. The number one best way is to head over to the Reb's website at www.therebelbroker.com. You can click on Contact the Rebel Broker, kind of hiding in plain sight right up there in the upper left or upper right-hand corner. And it says Contact the Rebel Broker. Click that. Send me any ideas, suggestions, observations, anything that you want to share, questions as well. Welcome them all, and I will respond as quickly as I possibly can. And of course, also, we're still running the audience survey to get sort of a demographic view of the makeup of the folks who listen to the show. There's a link to that at the very tippy top of the show, a button that says take the survey to help the show. Do that, and you will be helping the show. It's the button does not lie. So feel free to take a few minutes out of your day to do that. And finally, I know I've already asked you for a couple of minutes of your day. You're already spending probably about 30 minutes today doing the show itself. I know I'm a huge time suck for you. But if you get finished doing that little red button thing, if you could take a minute to go over to iTunes, write a review, give us some stars, that would also be fantastic. And I will just let that sit there, and I won't bring that up again this show, except for maybe way at the very end where I tend to always bring that stuff up again. So, all right. So let's jump in here. Some interesting data came from the good folks over at Realtor Mag relating to the 10 cities that are adding the most apartments. And I think that's very interesting data to have, because if you live in these areas, this is the kind of thing that absolutely can have an impact on a rental market. So if you are someone who is currently renting in one of these markets, you may want to be paying very close attention to what happens when the supply of rental housing units increases in your community. There's a very good chance you may be able to talk to your landlord about reducing your rent. It's going to depend on how much of a dent it makes in the current levels of demand. But typically, when you boost demand in an area, you're going to see, when you boost supply in an area, you see a more satisfied level of demand, which usually equates to less of a cost for that thing. So keep that in mind. This is I think, super relevant information for folks. And we'll talk about the other folks who it's relevant for, aside from just folks who rent. But I would also suggest that this is something for you to consider, even if you are a single-family residential renter. Because the bottom line is, while apartments are not the number one thing, and some of these areas are hugely impacted by low supply in terms of housing units. And I could see a dramatic increase in the number of apartments being out there actually making a dent in single-family residential homes, simply because some folks may want to get that monthly cash flow number looking a little bit better for them. And it might be very enticing to move into an up-to-date, newer apartment complex and get to do that and spend less money per month in terms of how they're dealing with their housing. Now, what's going to be super important is what kind of rental units these are. If they're 2-bedroom, then probably they're not going to be likely making a huge dent in the single-family residential marketplace, simply because the number one thing that pushes people out of apartments is that need for a 3rd bedroom. Although I've rented apartments in the past when I was a younger guy that had 3 bedrooms. So if the number of 3-bedroom units in these rentals represents a large enough number, could absolutely represent a challenge to some of those single-family residential landlords in those communities. So keep that in mind. Now, what we'll do is we'll run through this list, and depending on how much time we've got, we might even take a look at what are the current rents in these areas. What are things selling for? What are the average prices? These are all areas where new construction is occurring. And here's some other things. So apartment construction is at a 10-year high, generally. What's really weird is in some of the areas where you would think it needs to be most, it's not. So in addition to sort of looking at where this construction is happening the most right now, we will also look at the top 10 cities with the highest rents to see where the crossover is, because that'll give us a good insight into whether or not the high level of demand in various communities is actually being addressed, because there's still some areas where it's just not happening. The level of construction for housing units just isn't meeting the level of demand, and it's pushing these rents really into a crazy level. All right, now, and the next thing that we'd want to talk about in terms of how rental rates affect you is, of course, if you're a single-family residential landlord. If you are someone who currently owns a rental property in one of these marketplaces, I think it's very smart for you to be aware of changes that are happening in those areas that might affect what you can expect from your property. It could mean that you need to be a little bit more aggressive in your rental strategy in terms of getting out there with a more lucrative price. You may have to freeze your rental price for a period of time, depending on how much of a dent this makes. You may even have to reduce your rental price if you find yourself in a situation where you're vacant and you're just looking to get somebody in there. And again, one of the things that happens at a time like this, when potentially you're going to see an increased level of competition from other rental sources, and if you are vacant when this kind of thing happens, desperation can kind of set in, right? It's always a good idea to have a certain amount of operating capital in reserve for those times when you are dealing with vacancy issues relating to properties, right? I think most landlords on some level grok that, I want to be prepared for those times when I might have a vacancy and I'm trying to get the place refilled. I'm going to strongly suggest that use the techniques you need to do to attract tenants, but don't find yourself in a position where you're trying to rush through the tenant background check process so that you can get someone in there renting as quickly as possible. The number one mistake I see investors make, or landlords make, is not understanding that, and when I've talked about it before, you make money when you buy a house, not when you sell it, right? And that's an emphasis on the negotiations and understanding that you're buying correctly and that you're getting the right location. You're making all the right decisions on the front end that are going to really make a difference, that are really going to define whether or not you do make money on that property. Well, in the world of landlords, you don't make your money when your tenant pays the rent. You make your money when you pick the right tenant. Simply because once you get someone in there who isn't going to pay the rent, depending on where you live in the country and depending on how the laws are about how you can handle folks who are not paying their rent, you may find yourself ridiculously screwed. If you're in the state of California, you may have a very long road to go down before you can get yourself a resolution so that you can then get in there and make that property ready to rent again. There are plenty of horror stories out there about bad circumstances that landlords found themselves in. And by and large, if you look at the details, what you end up discovering is that if these landlords had spent that extra time not cutting corners and doing that background check of their prospective tenant, they could have completely avoided a really nasty situation. So I am a big advocate of if you're someone who doesn't feel qualified in doing a background check, hire a service to do it. It should be your number one job in terms of filling the property. And frankly, this is also one of the areas where I find most property management firms are lacking. In fact, if you're someone who's interested in using a property management firm because you want to avoid these kind of problems, one of the first questions you should ask is, what is your pre-qualification process for tenants? And you should also request that any folks who want to rent, you want to see the property management company's research on that individual's background. If they can't provide you with that data on a regular basis, you've got a problem. So you need to make sure that it's documented, that it's written in the agreement ahead of time, that they will do their due diligence in evaluating the background of any tenants that apply for your property. And you know what? After all, that's really how they're earning their money. Their responsibility is to bring in a tenant who's going to consistently and in a timely fashion pay the rent and hopefully keep your property in a condition that you would rather it be kept in. And that isn't a process that you discover over time as the person rents. That's something you're supposed to discover about that person before you sign a rental agreement so that you're not committed to letting them into your property when if you had just done a little bit of background checking, you could have easily taken care of that. Another person who benefits from this, so we've covered it, right? Current renters, valuable information we're talking about. Folks who currently are landlords in these markets, also valuable for you to give you a heads up on things you may want to be on the lookout for, particularly if you have leases that are going to expire in this time frame when these new units are coming online. And finally, yes, even flippers are going to benefit from this. If we find a dynamic, and I think this is more important maybe in terms of the delay that occurs between decision to be a flipper and flipping. I'm going to strongly suggest that in these marketplaces, if you're someone who's kind of doing the flipping thing, do your flipping with a backup strategy idea of renting. Just because if you see things change enough in your marketplace where renting becomes far more financially beneficial, in other words, rents go down, it may become a situation where folks say, you know what, instead of buying right now, I'm going to go ahead and continue to rent. So you may not have as many buyers out there for that property that you're trying to sell. It may encourage folks to remain renters longer, which would reduce the number of buyers, which would potentially be a good thing, depending on your market. If you've already got a market that's totally swamped by buyers, then this probably wouldn't play out as a problem for you. In my marketplace, this wouldn't play out as a problem at all, simply because we have so many buyers right now that if we were to see a big jump in the number of available rental units, I still don't think it would put enough of a dent in most segments of the market. But we've already discussed the micro markets within the Silicon Valley area that I think would be affected by this, where we've seen slowdowns in some of the areas in South San Jose and even some of the areas down in, say, Gilroy and Morgan Hill, where I tend to service most of the time. All right. So let's go ahead and jump in. But before we do, we're going to take a quick break. But when we come back, we're going to jump in and talk about the top 10 cities that are adding the most apartments. So stay right there. Are you ready to jump in and start your search for your first investment property? Maybe you've decided that it's time to own your own home, or maybe you're ready to sell your home and move on to something new. No matter what your goal is, the Rebel Broker can help. That's right, aside from hosting this show, I am also the owner broker of Whitelaw & Sons Real Estate Services right here in Silicon Valley. With over 25 years experience serving Silicon Valley, Morgan Hill, San Martin, and Gilroy, I or one of my great agents can help you achieve your goals in real estate. So if you're ready to look into taking that next step towards achieving your real estate goals, point your browser at www.soldbyrobert.com. That's www.soldbyrobert.com. soldbyrobert.com and get in touch. Let me show you how I will earn your business and your respect. Again, that's www.soldbyrobert.com, or you can call me at 408-852-0525. California Bureau of Real Estate ID 00984-909. All right, welcome back. We're going to go jumping into our list of the top 10 communities that are adding the most apartments. Now, one interesting comment made in this particular report is that while there are more than 320,000 new apartment units, and that's the highest number in a decade, that are expected to be coming onto the market this year, so this is a very now thing. What's interesting about this is that this is not apparently aimed dramatically at folks who are looking to get into their first apartment. The article states, quote, several markets are seeing explosive growth in new apartment buildings, but renters shouldn't think that the extra supply likely will translate into lower rents. Many of the new rental options are centered in the luxury market. So, of course, that means many of them, not all of them. So this is something you're going to want to figure out for your area. Even though some of these may be aimed at quote-unquote luxury segments, it'd be interesting to see what they define as luxury segments. That translates to me as larger units, which I think would potentially directly compete with single-family residential rentals in those areas. So it's going to be an important thing for you to figure out what these units are going to be comprised of in terms of number of bedrooms, and also what the rent is going to be for these things when they're done. Now, oftentimes that's difficult to find out ahead of time. Sometimes it's a number that's been researched and they're considering it, but it's not something they've released publicly. However, once they since this is mentioning most of these things coming online this year, usually you'll see those banners right when you're getting to within 3 or 4 months of completion that'll say in the range of X to X, and that should be a guide for you. And it would be worth your while if you're a property owner who is a landlord in those areas, or you're a renter, or you're currently renting a house, or you're a flipper who wants to figure out what's going on in terms of who they're catering to and what potential impacts it might have on folks who might be interested in properties you would flip. Go in and find out what the details are in your particular marketplace. According to Jack Kern, Rent Cafe's Director of Research and Publications, quote, we're building for those who have successfully come out of the recession but are leaving behind those who are struggling just to make rent. The construction costs are so high and the cost of materials and labor has continued to rise, which makes it almost impossible to build affordable units. But the rate of growth in the cost of rent will probably slow down going forward. The economy has started to cool off, so folks won't be getting raises that will allow them to afford rent increases at the rate they did previously. So what does that translate into for us in terms of what we're trying to understand here? It sounds clearly like they're trying to come into these marketplaces in a way that doesn't disrupt whatever the current rent structure is. They want to come in and offer something that's going to supply demand, but not serve as something that's going to drop rents. I get the feeling, given the fact that there's so many, and we'll see, what cities are getting this. It'll be interesting to see the impact, but it's hard to imagine this many, the highest number in a decade, not having an effect of some kind. So I think that for those of you in these areas, it's going to be important for you to be aware of what kind of construction of this type is going on. And what's interesting is that Texas is dominating with the most apartment construction on this particular list. So let's go ahead and jump in and take a look. Before we jump in, though, let me give you a little bit of history on new U.S. apartment supply, because this is an interesting number. If you go all the way back to 2006, so this predates the downturn, right? In 2006, 140,000 new U.S. apartments came online. 2007, 160,000, almost 161,000. 2008, 160,000. 2009, 182,000. Then it drops fairly dramatically in 2010 to 122,000. Really interesting, and I think something like that really set the stage given the high level of demand for rentals. Remember, in 2008, 2009, things totally hit bottom, and the number of folks who needed to find rentals went through the roof in 2010, but the number of new apartment buildings went down a substantial amount. Went down again in 2011 when only 76,000 units came online. Then it's been steadily increasing since 2011. In 2012, it went up to 111,000, and in 2013 up to 146,000. 2014 up to 198,000. Then in 2015, it went to 214,000, so a relatively small jump. But now between 2015 and this year, 2016, that number has jumped to 321,000 units in 1 year. That is huge, right? And we already discussed that number, but when you look at it in comparison to the past years, that becomes kind of staggering. I mean, that's a huge uptick in the number of units that are going to be available out there for folks to consider renting. Okay, let's see here. Let's go ahead and hit the top 10 list here. Number 10 is Denver. Now, Denver is going to see 10,849 new units delivered in 2016. Atlanta, Georgia is next on the list with 13,964. Excuse me, did I say 13,000? I meant 11,964. Miami is going to see 13,245 new rental units in 2016. Seattle is going to see 13,384. Austin, Texas is going to see 13,568. Then we get a pretty dramatic jump at Washington, D.C., getting 18,027 additional rental units this year. Los Angeles jumps up to 20,205 increased this year, or new apartment units this year. New York, 21,177 new rental units in 2016. Dallas, Texas, 23,159 is going to be added this year. And Houston, Texas, topping out our list at number 1 with 25,935 units. Now, let's go ahead and before we move on, let's talk about the areas with the highest rent and see where we might have crossover here. Where are we going to be making the biggest dents, right? Because one reason we want to understand which areas are seeing these dramatic increases in the number of rental units that are going to be available is to see if it's going to make a dent in an already super high rental scenario. Now, the number one city in terms of rent for a median 2-bedroom rent is New York, $5,130. And New York is number 3 on our list, so that's a good crossover. I think that makes a lot of sense. Number 2 on our list is San Francisco, California. Now, while San Francisco is seeing an increase in the number of rental units, it is not in the top 10. In fact, it is number 12 on the list at 9,362 new units. And I think that represents a kind of a tragic disconnect between the demand for what folks need and what's being done. We talked about this a few weeks back, the NIMBY movement, not in my backyard or yes in my backyard movement. And San Francisco is a really big place for that. And I'm a little disappointed to see that places that are crying out so heavily for a little relief in this aren't sort of letting builders loose to simply live up to code. And get out of their way and let them build this stuff. The barriers to folks building in places like San Francisco are ridiculous. It may be San Francisco and Santa Cruz County, in my personal experience, are probably the 2 worst places to build in terms of bizarre stuff, rules changing, folks changing the rules on you midstream, and taking far too much weight of what neighbors do or don't want you to do with your property. I think that stuff's ridiculous, and I think it stands in the way of a lot of progress being made and what happens with properties. Next on the list in terms of highest rents, and this one kind of blows my mind, Jersey City, New Jersey. Why does that blow my mind? Well, first, it's at $3,340 for a 2-bedroom place. The other thing is everybody's moving out of Jersey. Jersey is still the number 1 most left state in the union. I get why rents are more desirable simply because property taxes are so high in Jersey. But why in the world would people get that much money for a rental in Jersey City? Maybe it's I don't know what it is, but it blows my mind. Next on our list is Boston, Massachusetts at $3,190 for a median rental of a 2-bedroom unit. And Boston is, again, on the list, but it falls lower than San Francisco at what looks like about number 15 or 16 on the list. Now, we've got another crossover Washington, D.C., $3,140 for your typical two-bedroom. And Washington, D.C. is 1, 2, 3, 4, 5 on our list in the top 10. Next is Los Angeles, California, $2,650 a month for your typical two-bedroom apartment. Los Angeles, again, was also in our top 10, and was actually number 4 on our list. San Jose, California, $2,000 is basically the same as Los Angeles, $2,650 for a two-bedroom unit. And San Jose is way down at number 20 on this particular list with only 5,866 new rental units. And when you consider the population of San Jose is gigantic. And the number of renters, that number is so skewed and wrong given the population of the city of San Jose that it blows my mind that's actually happening. Stamford, Connecticut is also here in our top 10 list of highest rents at $2,640 for the typical two-bedroom apartment. And Stamford appears nowhere on the top 20 list in terms of new rentals being built. Next on our list, number 9 is $2,350 for a two-bedroom unit in Miami, Florida. Miami is indeed in our top 10 list at number 8. So that clearly makes some sense to take a little pressure off there. Next is Seattle, Washington, which was also on our top 10 list. Prices there are $2,300 for your typical two-bedroom unit. And that was number 7 on our list in terms of the number of units being added. So I think that'll help. It's good to kind of see where the crossover is in terms of cost versus where these units are going to get built. What's also interesting to note here is and the article I'm going to link to for this is going to give you some even more detail. If you're in any of these communities, you're going to find that for the bigger ones, there are maps indicating where these places are being built. Now, Houston dominates in terms of the number of units being built. They've got one right there right in the heart of the city. They have 16,478 units are being built. And then areas surrounding Houston, like Missouri City, Pearland, whatever that is, League City, Seabrook, LaPorte, Pasadena, Humble, Spring, The Woods, Conroe, Montgomery, Tomball, Katy, Richmond, Missouri City, Kate Jackson, Galveston. These are all areas that surround Houston that are also getting apartments built this year. So I think that's very interesting to see how hit Houston's going to be. And if you're someone who owns a rental unit at the extreme north end of Houston, I'd be looking, because a lot of those towns up in the northern end really seem to be adding a lot of units. Next in Los Angeles is an interesting one to look at, because at Los Angeles, they've got 7,039 units being built right there in the heart of downtown. But there's so many, I don't even want to read them all off. All the way from the extreme south end of Laguna Niguel and Laguna Hills and Irvine, all the way up to Ventura, Oxnard, Northridge, West Hollywood, North Hollywood, Hollywood, Glendale. All of these various areas are adding units, and it's spread out all over the area. So I think it's one of those areas that's going to see a lot of interesting shifts potentially in terms of just availability. You add this much supply, and I got to tell you, my feeling is that that's going to make a difference. Now, one interesting thing about this data is that one-bedroom units apparently dominate the 2016 apartment completions. One-bedrooms make up the biggest chunk, 51% of the rental stock projected to come online this year. Studios rank lowest, thank goodness. I think that's ridiculously smart. It's always been smarter to go lighter on studios, but I'm glad to see that they're not assuming they can get more money for less by increasing the number of studios. 4.7% of the new rental inventory will be studios. 2 beds take 37.5%, whereas 3+ beds represents 6.8% of 2016's new supply. So that's on average, and I find that to be kind of interesting simply because that represents a little bit less penetration into what's potentially normally a single-family residential concern. But also, they break down the data further into those top 10 areas. So, for instance, in Denver, studios make up 4% of the new apartment constructions. 1-bedrooms make up 55%. 2-bedrooms make up 36%. And 3-bedroom plus make up 5%. What's kind of interesting is that Austin and Miami both have much bigger percentages of 3+ bedroom rental units coming on the market. Miami has 1% studio, 39% 1 bed, 48% 2 bed, and 12% 3+ bed. And Austin, Texas has 3% studio, 55% one bed, 32% two bed, and 10% 3+ bed. So I think that's interesting numbers. So if you're in those marketplaces and you're renting a single family residential home that's a 3-bedroom, I think that there's likely to be more competition for you in terms of other rental options that these folks are going to have. Now, and I've visited apartment complex. Across the country, you get such a different vibe from different rental complexes, from different apartment complexes. If these folks build right, and obviously these are all done by tons of different builders, and you're going to have to see. Here in California, we have a development that just went in just off the 85 freeway. And if you were to rank what you think are very desirable rental construction units or the absolute worst style rental units, these are the latter. These are the worst. These are densely packed, doesn't look like there's a lot of amenities, and everybody is just shoulder to shoulder. And some units that I've seen in places like Austin tend to have a different aesthetic. They don't tend to feel that cramped. They tend to feel, in other words, the builders get that the biggest downside to apartment living is this cramped sardine style feeling, and they address it. But then there are these builders who just don't care and want the maximum number of units per acre and assume that's always going to be a viable thing. Whereas if we've learned anything over the last couple of decades, it's that markets shift, and as desirability goes down, I see places like that as having a huge amount of vacancies, simply because nobody wants to live like that. So it'll be interesting to see how that kind of stuff pans out, but it'll be interesting to see in your communities, if you happen to be in one of these communities, take a look at them and see how they stack up. Are these places that are going to make it comfortable to live in an apartment style setting, or have they totally gone the other way and have simply crammed as many units as they can on a small amount of space as possible without really giving people any feeling like they're getting any breathing room at all? It's going to help rent cool off in some cities. The anticipation here is that at the very least, the amount of growth gets slowed. We saw rental growth peak in 2014 with a 6.3% increase. In 2012, it was 4.8. 2013, it was 5.3. And then we peaked in 2014 at 6.3. Then the increase in 2015 was 5.6. And the estimated increase in 2016 is going to be 4.4. Do we call that something to be concerned about? No, because remember, we're talking about growth. We're talking about how much it increased year to year. But remember, these units aren't all online yet, so we aren't experiencing the full effect, at least in these communities. And these are general numbers across the country. This article states, quote, while average rent prices are indeed at an all-time high, the overheated rental market is starting to lose steam. Rent growth peaked at 6.3 at the end of 2014, but slowed to 5.6 in 2015 with a projected 4.4 increase at the end of 2016. So remember, this is not data that pertains only to these areas we're talking about. These are national numbers. So these areas that are seeing a higher level of construction may actually see bigger declines in the amount of growth in rent. And it'll be interesting to see where that takes us as we move further into 2017. Now, to sort of illustrate that, let's take Houston as an example. And quoting the article, the huge supply increases and economic uncertainties accompanying the cuts in energy and mining jobs have brought Houston's rent growth to a halt in 2015. After giving renters some reasons to question affordability in 2014, where their rent growth was up 8.4%, Houston rents increased only 3.6% in 2015. Now, if you're in a market like this, that is a precipitous drop in the amount of increase. And hopefully you as a landlord you were not budgeting for this trend to continue. In 2012 in Houston, in the metro area, in 2012, they saw a 6.4% increase, 2013, a 7.7% increase, 2014, an 8.4% increase. Now, if folks were expecting that trend to continue and budgeting for that as far as how they're budgeting as a landlord, they'd be very disappointed in 2015 when it dropped to 3.6, and in 2016, it's projected to be 3.4. This is one of those marketplaces where, again, we haven't seen the end of this, I think, downturn, given the amount of new units that are being built. And remember, we're building record numbers this year compared to the last decade. What's also interesting is that we're starting to see the return of concessions and discounts in some rental marketplaces. So that's something to keep in mind as well. These are all, for me, these are frequently leading indicators for folks who are either looking into being a landlord in certain areas or are landlords, that you need to reassess what's going on in your local marketplace. So I think strong demand is still out there in the near term, particularly crazy markets like mine. But the reality is that I think some of these changes to the makeup of the rental marketplace are going to have an effect on you. And it's also good to try to anticipate the future here. Now, let's talk about San Francisco real quickly before we sign off today. San Francisco's number was really low, 9,362, but it also outpaced new apartment supply going all the way back to 2006 by a large margin. In fact, going all the way back to 2006, the highest number of apartments that were added to San Francisco was in 2007 with 5,113. And in 2016, they're adding 9,362. So even in San Francisco, and still that's not enough, in my opinion. I think that we saw drastic decreases in that from 2008 to about 2011 or 12, and then it started to increase again. But I think that still doesn't come close to meeting demand, given the number of jobs that are held in the city. Now, rental price trends have just been steadily going up the entire time. The only time you had rents sort of hesitate a little bit was in 2009, 2010. But that was it, and we were talking handfuls of dollars. We were talking $10, $20 bill differences from one year to the next. So San Francisco, in terms of rentals, really kind of blew through the downturn. Communities where it's pointed out that there's a very clear lag in terms of amount of apartment construction. So in other areas that have far more demand for folks to supply rental units. So, right, that's you. That's an opportunity for you as an investor. San Francisco, for example, that's one place that dramatically needs an increase in the number of folks out there renting. Portland, on the other hand, isn't excelling in new apartment deliveries compared to other large metros, and it's not making the top 20 U.S. markets in the 2016 list, is still marching full speed ahead in new construction in an effort to keep up with pent-up demand. Approximately 5,000 new units are planned for delivery this year, 20% increase compared to 2015's completions. So a city like Portland, which is in a relatively good situation, is still providing far more housing or at least facilitating the process of folks building apartment complexes than other communities that are in dire need. So it can absolutely be done. It's just a question of sort of getting out of the way and let it work. Now, to sort of put the cork in the bottle on this one, I wanted to cover the 5 markets that seem to have the greatest forecast rent growth for the year ending 2016. Some of these are going to be very understandable. We've talked about these markets before. Number 5 on the list is Seattle with 7.2% forecast rent growth by the end of 2016. Dallas, Texas, 7.3%. Portland, Oregon, 8.8%. Sacramento, California, 8.8%. San Francisco, California is at 10.5% expected forecast rent growth. And remember, that's despite a dramatic increase, at least in this year, of the number of rental units that are being added. And for my money, that's a backfill number. You can say, oh, great, they're making headway. No, they're making up for years of not doing enough, basically, in San Francisco. So that's kind of how that stands. And plus, always remember that oftentimes these headline-grabbing communities are not the one where your bang for the buck is going to get you the most. Despite the fact you may see rent growth of 10.5% this year in San Francisco, the cost of acquiring a property in San Francisco is at the point where you'd have to bank on that happening plus a lot more in order for positive cash flow to be a realistic expectation. So some of these high visibility places may sound great, the numbers may sound beautiful, but when it comes to the math of figuring out what it costs to acquire and then what the number is in terms of positive cash flow at the end of the month, you end up discovering it isn't so great. And that's why I'm so much more interested in sharing with you some of the communities that we've talked about over the past couple of weeks in terms of return on investment and cap rate and that kind of stuff. So hopefully that information is helping you make some good decisions, and this will help you maybe guide your eye towards places where you can anticipate changes in the makeup of the rental marketplace. Thank you very much for making this show a part of your daily routine. The show only succeeds because of you, and I thank you for that. As always, thanks for listening, and I'll talk to you all next time.